Hey everybody, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here with me today. So today we're going to be talking about our investing plan for the month of October. You see my little sweater here. So I'm trying to get into the October theme. My kids love Halloween. My neighborhood gets really into the whole trick-or-treating decoration type of thing, but I just can't believe it's October. I feel like it was just June, and I love the summer. The summer is my favorite season, if you didn't know. Although I do love fall, but I love the warmth. I don't like being cold. But the time is just passing by so fast. And again, because the time is passing by, it should incentivize us to make sure we have a plan for our money. Budgeting is great. Paying off debt is great. But if you're trying to build wealth, if you're trying to retire early, if you're trying to achieve financial freedom, you cannot do that without investing. Investing is really the best way for you to grow your money. I just, again, talked about all the monthly dividend income that we received in our taxable accounts for the month of September. Almost $900 that our money made for us. I didn't have to go to work for it. I put the money in those positions and held. It's $860 to be, precise. But again, you have to invest. So what I try to do on the channel is show you that on any income from small to large, you can do it. You can do it with fractional shares. You can do our $1 a day investing challenge. And I do it with consistent, videos and a consistent strategy. So you guys can see in real time what it is. Okay, through our actual real numbers. I don't just say invest because that's really vague sometimes, right? But actually show you through our journey what is possible, okay? And everybody else, all of our investy besties, our community over here, that's what I love about what we have. But our investing plan for the month of October. So I did mention in September, we were pulling back a little bit so we can build up our savings accounts and sinking funds. The savings amount that we had with inflation, I feel like we just have to increase it. Car problems, house problems, one of the kids got sick, so medicines, even what they used to cost 6 months ago, they're more expensive now. Just like your standard cold medicines, they're more expensive now. And so I want to make sure that I'm increasing our savings accounts and our sinking fund accounts with the rate of inflation, right? Because money, it costs more just to survive nowadays. And so for October, I'm going to kind of continue with the same thing, though I'm going to increase it a little bit. So our plan for the month of October is to invest about $2,500. Now, this is in addition to what we do for the 401k and the HSA and all of that good stuff. This is in addition to that. This is after tax. So about $2,500. You also can see down below our pre-tax investing and our post-tax investing. But I really want to focus on some good stocks and funds that are kind of on a discount right now. There's 5 in particular that we are looking at that are, to me, is discounted right now. The market has been crashing in September. It was really bad. The second half of August, all of September, and it may do it for October. But, I'm looking for some extra deals. We're always talking about Black Friday, and we're probably starting to get the advertisements about, Black Friday, Cyber Monday. But investors, we like to look for sales and assets. So I'm going to share with you 5, in my opinion, cheap dividend stocks. Now, one of them, they're paused their dividend, but I'm still looking at them because I think they're at a great price. So the first is Disney. So we own Disney in our long-term accounts, and our children have Disney, but Disney really is looking juicy at the price that it's at right now. At the recording of this video, it's about $81-ish. It could change. I'll have it up on the screen, but did you know that if you go to Magic Kingdom to get in the park for one person for one day, just not a park hopper, just staying in Magic Kingdom, it's $105, or depending on the season, it could be $110 or $115, but let's just say $105. The ticket to get into the park is more expensive than a share to buy in the company. Now, yes, Disney has been having some problems with, the politics side and then how the business is ran. But at the end of the day, Disney is Disney, and they have a huge and loyal fan base. If you go on YouTube and you type in what to do for Disney, how to go to Disney, what to pack for Disney, how to plan for Disney, because this is what I did. There are thousands. When I say thousands of videos, there are thousands of videos, so many Disney like influencers, lots of good tips, people who document their journey there and while there. And so Disney has a really, really strong fan base. And plus we love the Disney Plus. So I am looking at, is Disney at a great price right now? And so I'm looking to get it under $80, but I will buy it at 80. So for the month of October, that is what I'm looking at, because Disney, again, with all these problems, if they can straighten it out and kind of refocus on the business, you know, buying it this low would be a great deal. Now, that's just us, not financial advice. I'm just telling you what we're looking at. The next one is Realty Income now. Now, come on, raise our hands. Realty Income is taking a beating right now, okay? It is being like shaken, but it's at a really great price. At the recording of this video, Realty Income is under $50 a share. Now, I made an extensive video talking about why we love Realty Income. I'll have it somewhere up on the screen. Take a look at the video because I kind of walk you through it. But some of Realty Income tenants are 7-Eleven, the Dollar Tree, some of the warehouses that Amazon has to ship out your products. Guess who owns it? Realty Income. Some of the Sam's Clubs, the Walmarts, the Targets, CVS's, Walgreens, AMC movie theaters. Again, these are tenants that are not going anywhere. But again, the stock market is scaring a lot of, like the investors out. So this is what I'm looking for. And I have already started buying. I've already started buying, but I'm looking to buy even more. Next is SCHD. SCHD has been taking a hit as well. So at the recording of this video, it's about like $71, give or take, some change in both directions. But let's just say $71 ish, right? And I would love to get some SCHD in the 60s. Like, again, this is my Black Friday. I in the past, I would stand outside for a toaster that I can get for $10 that I would never use. And I would be out there for hours. Why can't I do this with an asset that can benefit me in my future? But yes, SCHD is on that list. Amazon. Now, Amazon is having some trouble because the government is trying to stop them becoming a monopoly and all of that. But again, at the end of the day and going into the holiday season, how many of you are going to be ordering off of Amazon? I'm just going to wait. I'm going to wait. And then Prime Day and then Black Friday, Christmas, all of that. And Amazon fell a little bit. And so I'm hoping to get some more Amazon as well. And then finally VTI, which is probably the safest, the most safest, conservative, diversified ETF you can get access to. That's also down. But again, I like buying assets on sale. So those are the 5 we're looking at that are cheap to us, So again, let me know down below some of the cheaper dividend stocks you're looking at. Ooh, that's coming down a little bit. I want to get some more of that. Let me know down below. So some of the things that we are thinking about when it comes to our notes to self or a special quote that we're thinking about for the month to keep us motivated. I really am focusing on wealth is made in recessions. That's what I'm focused on because it really can get intense when all you see is red and you're down thousands of dollars in your account. Number 1, you're not alone. But number 2, if you focus on the long game here, remember, this is not the first recession we've ever been in. This is not the first high inflationary period that we've ever been in. And guess what? There are going to be more. They're going to be more down the line. So one of the things my husband and I are focused on is remaining consistent with our strategy. If you want to change your strategy and you realize, you know what, I feel like I have too many individual stocks and I want to focus more on funds, you can do that. Maybe you're the opposite. I have too many funds. I want to get my dividend income up. So I'm going to add some individual stocks. Maybe you want to get into bonds or CDs or whatever the case is. But again, you look at your strategy, check in with it. And then that way you can make adjustments, where you feel like it's needed. Okay. Now what we're watching, reading, or listening to now, I know several of you have been asking about the podcast and when was I going to start that up again? I am going to start that back up again. I'm thinking of incorporating that on this channel versus the separate podcast channel, only because it's complicated managing 2 channels. I didn't realize that, but as MT continues to grow and I do a lot of one-on-ones, I have private groups and things, is that, it may be easier just to embed the podcast on this channel. So I'm thinking maybe 2 regular videos a week, and then maybe on Friday do a podcast episode. So Monday, Wednesday, regular videos, and it'll still be the same kind of videos, just 2 instead of 3. And then on Friday do a podcast episode, because I feel like the podcast will give you some background, some like in between information of why we're doing what we're doing. I can talk about some of the pitfalls that we fell in and all of that good stuff. So let me know down below, like, you want me to kind of incorporate that on this channel or just keep that separate on the other channel. But again, thank you guys so much for watching. Let me know what you're looking at for the month of October. And until next time, I'll see you on the next one. Bye-bye for now.